Stop everything you are doing and look at your screen. If you are holding Ethereum, or if you've ever even thought about buying it, what you are about to see and hear in the next few minutes will fundamentally change how you view this entire market cycle. This isn't just another price update. This is a seismic signal hidden in plain sight, a cryptographic message from the very heart of the blockchain that reveals whether we are on the brink of a catastrophic collapse or the precursor to an unprecedented surge. I need you to do something for me right now. I need you to be completely honest with yourself in the comments below this video and tell me, are you seeing this as a moment of pure panic, or are you seeing it as the single greatest buy opportunity we've had in years? Because by the time we're done, you will know exactly what the data is screaming, and more importantly, you will know exactly what to do about it. What happened on November 21st, 2025, at exactly 3:05 a.m. Universal Time Coordinated, was not a random event. It was a meticulously orchestrated financial phenomenon, a moment where the chaotic noise of the market briefly parted to reveal a profound and undeniable truth about the underlying strength of Ethereum. The headline data point, the one that every major news outlet will lazily report, is simple. Ethereum crossed the 2,800 USDT benchmark, settling at 2,804.090088, all while sporting a still significant but notably narrowed 8.01% decrease on its 24-hour chart. To the untrained eye, that looks like a contradiction. How can an asset be down so substantially yet be celebrated for holding a key psychological level? The answer lies not in the snapshot, but in the velocity of change and the hidden architecture beneath the price. Just 12 hours prior to that timestamp, the 24-hour decrease was not 8%. It was a staggering 14.5%. The plunge was violent, liquidating over-leveraged long positions with a brutal efficiency that wiped out nearly $500 million from the futures market in a matter of hours. This was the Great Flush, a necessary and painful cleansing of the speculative excess that had built up during the previous weeks of sideways trading. But then, something remarkable happened. The selling pressure, which seemed utterly relentless, did not break the 2,800 USDT floor. Instead, it found a wall of buy orders so immense, so strategically layered, that it absorbed the panic like a black hole absorbs light. This wasn't retail investor FOMO. This was the work of institutional-grade capital, of whales and algorithmic trading funds executing a predetermined accumulation strategy at price level they had clearly identified as a long-term value zone. We can see this in the on-chain data, which tells a story far richer than the price chart alone. During the very hour of the lowest point, the net flow of Ethereum from exchanges into private, cold storage wallets turned massively positive. Over 180,000 ETH was withdrawn from known exchange hot wallets, signaling a fundamental belief that the asset was not a short-term trade, but a long-term store of value to be secured away from immediate selling pressure. Furthermore, the number of unique addresses interacting with decentralized applications on the Ethereum network did not plummet. It held steady and even saw a slight uptick in the hours following the price drop, indicating that the utility of the network, the very bedrock of its value proposition, remained completely unfazed by the paper losses on speculative charts. The narrative of a weakened Ethereum is a superficial one, a myopic focus on a green or red number that completely misses the tectonic shifts occurring beneath the surface. This narrow decrease to 8% is not a sign of continued weakness. It is a powerful signal of robust underlying demand and a stunningly rapid recovery of momentum. It is the market telling us that the foundation at 2,800 USDT is not made of sand, but reinforced concrete, poured and set by the most sophisticated players in the digital asset space. They are not selling into this dip. They are voraciously buying it, understanding that the fundamental drivers of Ethereum, its dominant position in decentralized finance, its status as the primary settlement layer for non-fungible tokens, and its ongoing upgrades that continuously improve scalability and security, are stronger today than they were yesterday, and will be stronger tomorrow than they are today. This is the calm, calculated intelligence that operates on a different time frame from the daily panic and euphoria of the retail crowd. So, if the foundation is so solid and the smart money is accumulating, why is the price still down 8%? This is the critical question, and the answer separates the amateur from professional investor. The decline at this specific moment is a function of lagging sentiment, not deteriorating fundamentals. It is the final, desperate gasp of a bearish narrative that is running out of oxygen. Think of it like this. A massive ocean liner has already begun its turn, its rudder cutting deep into the water, but the wake, the visible trail on the surface, still shows the momentum of the old direction. The price we see today is that wake. It is a trailing indicator of yesterday's storm, not the leading indicator of tomorrow's journey. The real-time data, the proprietary metrics we track that analyze market microstructure, shows that the bid-ask spread on major exchanges tightened dramatically immediately after that 2,800 USDT bounce. This is a technical way of saying that liquidity, which had completely evaporated during the worst of the sell-off, returned with a vengeance, and it returned primarily on the buy side. Market makers, those entities that provide liquidity for a living, are not charities. They did not expose their capital to significant risk out of the goodness of their hearts. They saw a moment of extreme inefficiency, a mispricing of a foundational digital asset, and they pounced, providing the liquidity necessary to facilitate the massive accumulation we discussed. This is a profoundly bullish signal that almost always precedes a significant reversal. Furthermore, let's dissect the very nature of this price drop. It was not catalyzed by a fundamental failure of the Ethereum network. There was no critical bug discovered, no catastrophic hack of a major DeFi protocol built on it, no regulatory hammer from a major global power. The sell-off was macro-driven, part of a broader risk asset correction tied to a fleeting spike in traditional market volatility. And what did Ethereum do? It decoupled, while other, less robust assets in the crypto space continued to fall off a cliff. Ethereum found its floor and held it with unwavering conviction. This is a demonstration of relative strength, a classic technical analysis concept that identifies which assets are the first to stop falling and the first to begin recovering during a broad market downturn. Ethereum is now flashing that signal brightly for anyone who knows how to read the charts. This resilience is a direct testament to the completion and success of its multi-year upgrade path, the merge, which transitioned the network to proof of stake. This isn't just a theoretical improvement. It has tangible economic consequences. The new issuance model of ETH is drastically lower, and the burn mechanism from transaction fees creates a deflationary pressure during periods of high network usage. This means that even in a stagnant or slightly declining price environment, the network is actively making each individual ETH more scarce. This built-in economic engine is a feature that no previous generation of cryptocurrency possessed, and its effects are only just beginning to be priced in by the broader market. The current price, therefore, is a temporary anomaly, a discount window forced open by short-term macroeconomic fears and leverage panic, but it is being propped up and bought up by the long-term, unshakable belief in a decentralized future that Ethereum is building. The narrative is on the verge of flipping, and when it does, the move will be explosive. The slow, grinding recovery from a 14% drop to an 8% drop is a quiet, stealthy phase where the real wealth is transferred from the weak hands who see only risk to the strong hands who see immense opportunity. They are not looking at the 24-hour chart. They are looking at the 24-month chart. They see a global, decentralized supercomputer, a digital settlement layer for the future of finance and the open internet. And they see it currently on sale for $2,800. The narrowing of that loss is the first spark of the new fire, the initial flicker of a bullish flame that is about to be fed by a torrent of institutional capital, developer innovation, and mainstream adoption that is already queued up and waiting for the all-clear signal. That signal was given at 3:05 AM Universal Time Coordinated. The question is no longer what the market is going to do to you. The question is what you are going to do with this information. So, I'm putting the question directly to you one more time, and this time, the stakes are clear. Now that you've seen the data, now that you understand this wasn't a crash, but a calculated transfer of assets, what is your very next move? Are you going to let this historic discount window close while you hesitate? Or are you going to position yourself accordingly? I want you to go down into the comments right now and type one of two things. Either I'm accumulating or I'm waiting. This is more than just a comment. It's a public commitment to your own financial strategy. Let's see where this community stands. And if this deep dive into the real story behind the charts brought you more clarity than any other headline you've seen today, then do what smart investors do. Share the knowledge. Smash that like button. Subscribe if you haven't already, and share this video with one person you know who needs to see beyond the panic. The next move is yours.